Hello, everyone. Welcome back to another segment of Investing with Sal. Just another day in prepping you and letting you see what I am doing with my portfolio. But I want to make this a quick announcement that this is not financial advice and that you should consult a certified financial planner before you start anything in investing, as well as do as much research on your own. Don't just blindly follow what someone does on YouTube. Now, with moving that along, these are some of the things I'm going to start buying, and this is why I think you should get into AT&T today. So I'm adding this company into my dividend portfolio. It's actually cheap now. If we look at the 5 years, I remember seeing it up around here and even kind of pouring here. I even remember like 7, 8 years ago it was in the 40s, I believe, or high 40s. But now it went as low as 17, which kind of climbing back up. So it's on the right trajectory. Now, as you know, T-Mobile bought out Sprint, so we went from 4 major carriers to 3. Now, why I think this is going to be the better pick out of the 3, Verizon and T-Mobile and AT&T, is that now this is just from me, my personal experience with my moving company. I have both AT&T Business Internet and Phone for the offices, and then I have AT&T wireless for all the phones and devices that my moving crews and teams use. I have not had signal loss. It's actually very efficient. The network doesn't seem to drop calls, and the GPS tracker that they have on this program, on their service, that you can use with the business wireless service, is top notch. I can track where anyone is. I can track them almost down to knowing which aisle they are in the convenience store. So from a personal point, I am a consumer of AT&T, and it's working out great for me. And we're only talking a total of $500 a month, which for a business that, you know, I do roughly $200,000 in revenue per month. That's pretty good. I mean, we're talking less than 1% of what we're looking at. But the reason why I say you should add this in is that they just seem to be pretty steady. Their dividend is high. You're looking at $8.88 per share. Their earnings tend to be up there too. I don't know if they're going to show them. Yep, here we go. So they do show them here. So they're beating them slightly, or they hit earnings expectations. So last quarter they beat it just by well, I'd say quite a bit. Not by a lot, but quite a bit. This quarter, I have a feeling, because this was actually upgrade season. So you had Father's Day, Mother's Day, and Easter. And generally a lot of people are born, so there's a lot of birthdays between April and July. I really think, because it's upgrade season, and from my understanding of working in the cell phone industry years ago, is that I think they're going to have another good Q2 performance, but we won't know that until July. As you see, it was part of it way back in the day. That's where I said it's like I had it higher and I was selling them off, and I sold a little bit of loss there. But what I want you to understand is I'm adding this into my dividend portfolio right here, and I'm a firm believer of micro buying too. And when I say micro buying, I don't mean like buying $20 here and then buying just a little bit at a time. I mean buying in a small portion of the amount that you divvy up every time you get paid, or every time that you feel is convenient for you to put money into the market. So for me, it's every 2 weeks when I pay myself, and the second one is always the most because I have no bills to pay. I'm just a single guy. So I got no bills, so I can certainly invest a crap ton of money into this. So this is one of the things I'm definitely going to put in. They still got a strong hold. Some say sell, but a lot of say buy. This guy is definitely in a lot of pension funds for the sheer dividend volume. So I suggest that we get that in there as well. and definitely $8.88 a share. So you're looking at 100 shares that you can get times 8.88. You're looking at 888 bucks per year that you're going to get that you can reinvest back into your dividend portfolio. Now, if you want to think about that, you're only looking at $2,100 to get 100 shares to get 50% of it back. I'd say that's probably, if you're going to go big in this, I'd say it's probably the most you want to go big. Do that and then let the dividends reinvest into AT&T so you can keep buying them. Now, for me, in my opinion, I don't like reinvesting dividends. What I like to do is get steady investments into dividend companies and use those dividends to buy the other stocks in the company in your dividend portfolio. So, like if you get let's say you get $500 from AT&T, I would like to put it into something else that has a little bit more potential. So I got one other NLY that's going to give $13 a share. I'm probably going to move that money that I get from this into that, and vice versa. And then when I get that dividend, I'll probably move that into probably something else. But right now, if I'm following, starting at the beginning of this year, showing that you can make it, that I'm going to get this account up, just this dividend account up to $10,000 by the end of this year. That's the goal. $10,000 here and about $40,000 into crypto. Now, I don't have a normal profession like you guys, like a lot of guys. I don't have a 9 to 5. I own and run a moving business. So if I work hard and make that business grow, then I can have more money to put in. But nonetheless, my goal is to somehow get this dividend account. So if I go back to, my goodness, I don't know if I can go back to my portfolio, but let's go back to the main page. So right now, you see, I haven't been focusing on making this dividend account, but it's just been dropping. But that's fine because we're just going to be buying. So you can imagine, because most of the money that I've been getting, that I allocate for this project, has been going into crypto because I wanted to get that base strong, steady, and solid. There's a lot of buying opportunities right there in the smart investments, which we'll go over two of my next investments I'm adding to this portfolio. And as you see here, this is nothing wild. This is something that you could have created if you were working a 9 to 5 that was paying somewhere between $45,000 and $55,000, and if you're a single guy. I would not expect you to be able to get a little extra money real quick. Now, this was off of just, I'm putting in $100. Like, I was only putting 100, 200 in every now and then into this, so it wasn't really growing that much or acquiring the resources for the base. A lot of it was going into Bank of America, which is most of the portfolio. And then you have NLY, which was also another big, a little bit bigger purchase, like 200. But the next big purchase is going to be right in there, and you're going to see it into AT&T. Now, what the things I am following is, I am following Coinbase. Now, I'm not following it because I think, it's just undervalued. What I'm following it is that I think it may be undervalued if certain things play out. Now, if they have a flatter loss than what they had last quarter, let's just say they only lost half of what they lost last quarter, I would say they're turning the boat around. Okay, I would say now is probably a good time to start putting a little bit in. Make it like 5% of your portfolio. They're not going to pay you any dividends, so this is a value-based move. We're only doing this to get to where it wants to be. Once we double or triple the money, whatever you feel is comfortable, we will exit out of that. That's the goal. I'm watching Robinhood because, one, I do think Robinhood is good for the overall investor. It's very good for the overall newbie investor. I shouldn't say all investors, because if you're an expert, an advanced investor, you're not going to need this platform. Not at all. However, I still say, even for everyone else, like, I like the fact that you can take your dividends, put it into that card, that credit card that they, or the debit card that they have, for 3.5% interest, and just leave it there. And that this could be an alternative means for retirement. So if you're a beginner investor or just brand new, this is probably a good platform for you to be on, to get used to it, to slowly ease into option trading and everything, and kind of get a grasp for what the markets are. So what I do like about this, especially for beginners, this is not overwhelming for new people. You get a little bit of information, you take a look at it, you don't worry about it, and you just you don't really do too much with it, right? And it's very simple to use. The app's very user friendly. It's hip. You like I like the black screen, and it kind of goes in with hip modern. The card that you can use is very good, and I like it. So I can't argue the usefulness to a newbie. What I can say is you got to be careful with, because I wouldn't buy crypto off of this. I had crypto on here before, but I took it off and then sold it, and then rebought in my wallet. So that way it's not exposed to this, because Robinhood has a custodial crypto wallet, and you don't really want that. But however, having custodial stocks, it's backed by the FDIC. You don't have to worry if something happens. You're going to get $250,000 back. So for the average investor, you're most likely not going to have more than $250,000 in Robinhood for the average person who doesn't know a lot about investing and is really not going to get that much into it. Now, if you're looking to be a trader and still don't know, this is a good place to start. But then you're going to have to move to a more intermediate level platform. And there are quite a few out there, and there's a few that are good, a few that are bad. And I'll probably do a video on that later on this week about some of the differences and some of my experiences with the trading programs. So with that said, that's enough about this. You can see, even if you're starting off, because like this is small deposits, but watch how quickly this will grow when I start putting, instead of putting like 90% crypto, 10% stocks, it's now going to be like 40% stocks, 60% crypto. Watch how quickly this is going to grow. Watch how quickly it's going to grow. And since we're aiming to buy dividend stocks, this is going to grow immensely. And we're picking the right stocks, we've got a little bit of high risk, high reward, but we also got a lot of good blue chip stocks that we're going to get in. So, and those blue chip stocks are really Bank of America, Apple, and AT&T. Now, after we get an even amount of AT&T, we're going to go after Apple, because guess what's coming out, right? The new iPhone comes out in September, October-ish. So July, we're going to start gobbling up some shares of Apple. Now, since we're on a budget, we're not going to be able to build this account as fast as some people would like. Like, it's really nice and fantastic if you could somehow acquire 100 shares of Apple, but you're not going to do that just yet. That takes about $12,000 to $15,000 to get all that quickly, right? You don't have that type of money, and if you're the average earner out there making $45,000 a year, that's a huge chunk of your income. That's like a year's worth of rent that you're putting into the market. So you have to set your expectations in a realistic manner. Now, if you're doing it the way that I'm doing this, which is I'm buying in under my micro buying platform, so I'm setting aside a specific amount out of every time I pay myself, out of every paycheck, to invest in, this account's going to start growing, right? Now, it's not going to grow at the $623, right? But what you're going to see in a month is you're going to see the difference once I put it, because like next week I plan on putting $500 into this and then divvying it up into my dividend portfolio, which is really going to act like a mutual fund once it gets to the amount of companies that I'll have in it. But right now, $623, it doesn't sway a lot. It goes up, it goes down a little bit. So far, it's lost $50 since the beginning of May, and I think it was at about $680 in that range. Now it's at $623, so we lost some money on that. which is fine. That is a perfectly fine thing to happen. However, it's good that you get to see those losses at a small amount and you get comfortable with it, because when you amplify, like let's just say there was a couple more zeros here, right? So we're at 62,000. That 1% loss might be like $100. Like, ooh, ouch, right? And then so now let's add another zero. Let's say it's 623,000. Now all of a sudden that loss today is now, ooh, ouch, that's 2,000. So getting comfortable with those losses is a good way to get you to be emotionally withdrawn from the markets, and then you'll be able to trade properly. So now let's move on to the crypto side. For crypto, I'm looking heavily at Solana as my next buy. I'm putting in a big purchase, so I have two companies I'm going to pick. Now, I am going to eventually invest in both of these, but I'm fairly new to crypto. I'm new as of this year to the entire crypto industry. So as a trader for 20 years, I have traded and dealt with stocks, bonds, and mutual funds. That area I'm experienced with. This area I am not. So I'm new just like all of you. However, I have 20 years of investing background to back me on my decisions here. Now, with that saying, make sure, because cryptocurrency, as in any high volatile marketplace, there's a tremendous amount of risk. There is a tremendous amount of reward, but there is so much risk in this market, and you really got to do your research, your due diligence, and make sure you're only putting in money that you can absolutely lose. So for me right now, my crypto portfolio, the last portfolio visit we had, it was sitting at just shy of $4,000 on this project that we are doing for this year, right? So if like I said, if I lose that $4,000, now this crypto is my only crypto that I invest. Period. I have other investments personally, both business-wise and personally. However, crypto, what I'm showing you is everything I got crypto. 100% everything I have crypto. So, and you can see, I have the potential to be able to, I can put in, even just in my business, $1,000 a day just investment without having a problem. Just pop it in there. And I could probably raise this crypto account quickly in 3 months, especially during the busy season or moving, to a couple $100,000. And I probably would make a shit ton of money. However, people got to realize, like, yes, there is a potential for a lot of gain. For that money in my company, people are relying for paychecks and things like that. And I got to pay taxes and all that other stuff. So that's got to be set aside, and you can't risk that. Now, in my company, that type of money goes right to savings. I save $1,000 a day. Actually, I really save about $3,000 a day off my revenues in my business. That's $3,000 a day right into the savings. Why do I do that? Because if the economy goes sideways or goes down, or we have depression instead of recession, my company's fine. I got right now about a year and a half's worth of payroll covered. So even if I have no customers from now until the beginning of 2025, I could pay every expense of my business without a problem. And people can not work and get paid. That's where you want to be in a business, because that's a lot of money. Now that's a huge account. That is generating a shit ton of interest right now. I mean, it's every time we do our monthly tax forms and P&L reports, that sucker is just pumping out money. However, I know a lot of people saying, well, why can't you just use that, and you're underpaying and blah blah blah. You're kind of capping. It's not cap. I can tell you right now, if you're smart and you're a smart business owner, you don't pull from your business to finance a lavish lifestyle. You build your business so that you can have a successful cash cow to build the next level of your net worth. And trust me, I'm just like every other regular guy. On paper, I'm considered an accredited investor, as well as I got a net worth in the 7 figures. But that's just on paper. Like I said, that could go any moment. Gone, And but at the end of the day, I'll still have this company, and this company still has real customers, real revenues, so I can still bounce back from it. And if anything should happen to me financially there, I still have this company going successful that can't be touched by my personal finances. Very smart to do. That is a very smart thing to do. Don't be like a lot of these people. If you're owning a business and you're being flashy with the money, saying I'm investing in this and doing all that, because one day something could go to zero and now you're fucked because all the money for your business is out the door. All the money for you is out the door and it's gone, and you really have nothing. So I consider my business a hedge to my life. So if anything bad happens in my life, I will always have this successful business, and I keep working on it. But with that said, Solana, people have labeled as the Ethereum killer. I'm not going to go too much into it, but you got the staking rewards, which is what I like. It's 5.2 on most places, like 5% somewhere there. So I'm comfortable with putting money into here to generate that 5% return. So if you're thinking, if you put in $1,000, you get 5%, you're going to get $500, or not $500. I'm sorry, you're going to get $50 back, right? So the goal is then to make sure we get somewhere in the realm of, let's say, $100,000, right? That's the goal to get into here. You want to get into Solana for about $100,000, and that's going to get you $5,000 of net worth. Now, I'm going to go read the white paper tonight, but this is one of the things I'm looking at, and is one of the decisions I'm going to be making. The next decision I have is Quant. Quant is the other one I want to purchase. Now it's even down lower. I said this would be a strong buy to myself if this went under 50. Now the reason why I'm looking at this is because it's kind of doing the same thing as DOT with the interoperability. However, there's a lot of smart money in this. Not to say there's a lot of smart money in DOT too, but there's a lot of high net worth funds that are looking in this, watching it, and passively investing in it. What makes this one good is that there's a cap on how many tokens that there are and will always be. So it's kind of being like DOT, but at the same time functioning like Bitcoin as a store of value. Also can be good. Now I'm also going to try to find the white paper, read that, do my due diligence on this. But remember what I said before, you shouldn't invest in anything that no one is transparent about. So it's hard to find information on Quant other than what you see, what they want you to see. With Solana, I got the white paper, I got the source code, I got a lot of stuff with this, right? It's all up front. You don't even have to be a part of their community to see it. So that's why this is probably going to be bought before Quant. But also, given the markets and given the scenario, and given that I believe we're already in the recession, I believe that this will go down another $10, and we'll get into the high 30s, and I'm going to start buying rapid succession on that. But with that said, guys, that's all I got for today. Stay positive, stay focused, respect the process. As always, make sure you go get a financial planner and a certified financial planner to make sure you are on the right path to saving for retirement. Thank you, and like and subscribe. It really helps me out, get me to the top of the list, because what I'm doing is not sexy. It's the real part of investing. It's the real dirt. This is how you're going to build wealth. You're not going to build generational wealth. As much as people would love to build generational wealth, that takes a Herculean amount of effort. What you will build is wealth enough to set your kids, your family on the right path. Now, this will help you build the stepping stone so that your kids can help build generational wealth. But if you are from the lower class or the middle class, you don't have a lot of wealth, you don't have a lot of money, you don't have a lot of capital, don't think about trying to get to $100 million quickly. Just think about trying to say, hey, look, I don't want to have to struggle when I retire, and I know may not be able to rely on Social Security, so I got to build something that's going to help me through those 30, 40, 50 years where I'm elderly and my medical bills are starting to climb. Just remember that. But as always, stay safe out there. Like and subscribe. Get that financial advisor booked. Get someone booked. Get that plan going. And remember to respect the process. If you respect the process, you will win. If you don't respect it, it will eat you alive. With that, again, see you next time.